My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people and my friends, I'm just trying to save you a little money. My job is not just to entertain, but really to put it in context, explain days like today. So call me, 1-800-743-CNBC, or tweet me at Jim Cramer. Welcome to the American industrial renaissance. Look, on another bad day for the stock market, Dow losing 368 points, S&P plunging 1.48%, and the NASDAQ going once again, doing what it's been doing, down more than 2%. On the usual Fed worries, I want to focus on the greatest untold story of the present moment. I like these down days to think about some things that are a little more positive. Everybody else is negative. See, not that long ago, America had lost its leadership in manufacturing. Sure, we had Hollywood. We knew how to make soda, processed food. But in manufacturing, we were eclipsed by Germany, then Japan, and then ultimately China. We lost our industrial leadership in pretty much every category, save perhaps aerospace. But those days are over. Oh, you sure don't notice it when you have a really ugly day like today. But the United States has been reclaiming its industrial preeminence in sector after sector after sector. It just was obscured by Wall Street's now defunct love affair with high-growth tech stocks. Now that we've fallen out of love with tech, the industrial renaissance has become the key to picking winners in this market. Let's start with the best. Let's start with Tesla. It's been years since an American company could make a car that rivals what the Germans or the Japanese could put together. But now Tesla's upending everything, designing the best electric vehicles that need zero advertising and are immensely profitable. Not only that, Elon Musk has already made his company into the best electric vehicle maker in China and Germany, too. Oh, he's running rings around those guys. No one disputes that Tesla's the best automaker in the world anymore. And if you listen to Musk's conference call last night, you'll see how he's accelerating success right now. Better cars, lower costs, and the best prospects for self-driving technology out there. Thanks to Elon Musk, the U.S., amazingly, has auto bragging rights again. That's why Tesla rallied $31 today after an amazing quarter. Even as the averages rolled over. Next up, America used to lead in steel. Then the Japanese steel industry got rebuilt after World War II using all of our best technology, and then they surpassed us. Then Brazil, then Russia, then India, then China, and South Korea. Our government allowed anyone to dump steel into our markets. They didn't care. But once former President Trump cracked down on foreign dumping, our steel industry's made a miraculous comeback. Nucor, our best steelmaker, is now the leader in quality at any price. In the old days, Chinese steelmakers could undercut Nucor because these companies didn't care about turning a profit. They were basically government-sponsored jobs programs. But now that the government has leveled the playing field, Nucor's manufacturing prowess has allowed it to reclaim the mantle of the biggest and the best. Hence how its stock could rally $6 today on top of an already huge run after an amazing quarter with a statement about the best is yet to come. How about chemicals? After World War II, we briefly became the king of the chemical industry worldwide, but then Germany rebuilt theirs, led by BASF and Bayer. Meanwhile, our chemical titans like Dow, DuPont, and Monsanto, they fell in hard times. Now everything is reversed. Bayer swallowed Monsanto for $63 billion and then fell prey to a huge number of Monsanto's lawsuits. BASF is headquartered in a country hostage to Russian natural gas. Oh, that's playing with fire if you're a chemical company. But Dow has now asserted itself as the world's leader in commodity chemicals, thanks in part to the fact that the United States is blessed with virtually endless supplies of natural gas. The numbers Dow just reported this morning were extraordinary, even as CEO Jim Fitterling has been doubted at every turn by everybody except for me. I'm blown away by this one. It hits 52-week high today. Dividend yield is still more than 4%. Incredible story. All right, how about oil? There was a time when America ruled the oil world with the best fields and the best monetization. John D. Rockefeller built Standard Oil, pioneered everything from drilling to transportation to gas stations. Even when Standard Oil got broken up, its former components were unassailable. But then OPEC emerged in the 70s, and the Middle East began to dominate the oil industry. The United States became an also-ran mendicant, hostage to the whims of OPEC. Then OPEC Plus, which also includes our nemesis, Russia. We went from being a net exporter to a net importer to a giant importer with the loss of almost all energy security. That all changed when we embraced the fracking revolution. In less than 10 years, our country's oil output doubled, and our natural gas industry is now second to none. We're now the leading exporter of liquefied natural gas because of visionaries like Sharif Suki, frequent guest of the show, who spent years building out infrastructure necessary to transport this stuff overseas. Suddenly, America is really the only counterbalance to Europe's addiction to Russian natural gas. We're the savior. If we just keep building out these liquefied natural gas terminals, we'll eventually be able to wean them off Putin's petroleum products. Meanwhile, our oil and gas technology, it's the best in the world. Nobody comes close. Our majors like Chevron and Exxon are far superior to their colleagues in Europe, who have nothing to write home about. These stocks get hit periodically. Chevron was hit today. But what's happening here is long-term, not short. Weakness should be used to buy, not sell. You should be hoping Chevron comes to the 150s. Next, I know our aerospace industry has struggled ever since those terrible Boeing 737 MAX fell out of the sky. And that was because of manufacturing problems. But the rest of our aerospace companies are very strong, from GE to Raytheon, formerly the aerospace business of United Technologies, Pratt & Whitney. Those two companies make the best jet engines in the world. No one questions that. I want Boeing to make a comeback. My trust owns it, but it's still in the penalty box. So I think it's on the cusp of an FAA approval for a wider body jet that will be in tremendous demand now that the suddenly robust airlines are desperate for more capacity. Go listen to those calls. That'll tell you about it. Hey, how about machinery? In the old days, Caterpillar would sink or swim with the broader economy, usually sank more than swim. But I believe a new, more disciplined Caterpillar could take on its Asian rivals if only our government, the knuckleheads, would level the playing field and not let them dump all that stuff so Cat can shine. Then there's Deere, which never really lost its lead at all. It's now pulling away as the ag business explodes. I think both Deere and Cat have the capital discipline and the manufacturing prowess to hold their heads up as the leaders in farm and construction equipment. The ag business, sadly, because of Ukraine, may be the best it's been in my whole life. Now, there are some industries that American companies never stop dominating. We still own soft drinks. We have many consumer packaged good companies like J&J or Procter & Gamble that stride the world with their strength. Although Procter had fallen behind Unilever and the rest of the world with emerging markets abandoning Procter aggressively. But that's over, too. If you listen to Procter's conference call yesterday, you know that the days of being a market share donor are over. It's bringing these emerging markets back to the Cincinnati fold. What a quarter that was. Now, I don't want to slight software, the crown jewel of American economy, but tech companies don't really manufacture. They don't make it here, with the exception of some semiconductor capital equipment plays like Lam Research. Otherwise, it's best to go to Taiwan Semi, where the actual chips are made. Boy, that's got to change, or we could have a real security risk on our hands. Fortunately, the government's plowing a lot of money into domestic security manufacturing. Can't do it fast enough. I wish I had explained to you that Taiwan Semi might be the single most important entity in the world when it comes to our economic security. Only a handful of people believe me. Here's the bottom line. The American manufacturing renaissance has arrived. You don't see it on a day like today, but if you want leadership, if you want companies that make things and sell them at a profit while returning capital to shareholders, look no further than our great American manufacturers. Their stocks are fantastic places to be when the world has turned against high, barely, or totally unprofitable growth. Let's go to Dave in Florida. Dave.
Hey, Jim, great to talk to you. Thanks for taking my call.
Thanks for calling in, Dave. What's up?
Hey, listen, in the beginning of February, I bought this stock, and I'm down 18% with it. Buy, sell, or hold Adobe.
All right, now, Adobe is one of these stocks that's completely caught up in the Fed raising rates because it's not like during an inflationary period. You are going to have to stay the course because it is a great company. Let's go to Joe in my home state of New Jersey. Joe.
Hello, Mr. Cramer. Hope all is well.
Oh, going well. How about you?
Very good.
Good.
Very good. I'm talking to you. To you. It's great.
All right.
Okay. I've owned Visa for years, and I noticed a lot of the restaurants are adding a 4% surcharge to all the credit card charges. How's this going to affect the Visa's top and bottom line?
Well,
Should I continue to hold?
I can tell you, as someone who's been in that business, there is a resistance to what Visa and MasterCard are doing. And the best way to deal with that is to be in Apple Pay, which means being in the stock of Apple. How about Doug in Ohio, please? Doug.
How you doing, Jim?
I'm doing well, Doug. How are you?
Pretty good. I have no complaints. My question's about Danaher. I purchased it at $239. Today it was $278. Highs touching $334. Do you feel, there's more upside to
Absolutely.
this stock?
They had 12% organic growth, which is the best of any of the manufacturers I deal with. I've got to tell you, we bought a little bit for the Charitable Trust. They had a big piece. If you go watch our 10:20 morning meeting, the Danaher call, if the market hadn't collapsed, Danaher was screaming higher. They did a great job. 12% organic growth for that kind of biological machinery that they have is fantastic. All right, guys, the American manufacturing renaissance, it's here. If you want leadership and companies that make things and sell them at a profit while returning capital to shareholders, look no further than these. Well, Mad Money tonight, the tech apocalypse continues, so how should you evaluate some of these names now that they've fallen from the clouds? I'm revealing a new rule that might help you figure out where you can start buying. Then Carvana collapsed today after earnings. So has the stock officially been put in park? I'll give you my take. And then, hey, you want something sweet and bite-sized that you can own right now? Huntington Bank shares reported top and bottom line beat for the first quarter. They got a good yield, and I think that this regional bank may have what it takes. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.